Cinemark, which saw box office momentum buoy second quarter financials, said August and September will be tougher as new release volume dips. CEO Sean Gamble told Wall Street on a post-earnings call that the nation's third-largest exhibitor is optimistic on the business, but that the pace of an ongoing recovery depends on consumer sentiment regarding the pandemic, sustained quality and diversity of new films, and the number releases. After a string of blockbusters led by Top Gun, Maverick, the industry is girding for a slowdown on seasonality, pandemic-related production delays, and film release date shifts. Late fall and winter picks up, with highlights Black Adam, Black Panther, Wakanda Forever, Puss In Boots, The Last Wish, Shazam, Fury of the Gods, Avatar, The Way of Water and others. Cinemark earlier posted narrower in revenue for the 3 months ended in June. The former was up 152% to $744 from $294 million. Admissions revenue was $382 million and concession revenue $286 million, driven by attendance of 52 million ticket buyers at an average ticket price of $7.34 and concession revenue per patron of $5.50. Losses of $73.4 million compared with losses of $142 million a year earlier, for a diluted loss per share of 61 cents versus $1.19. The Red Ink included a $92 million write-down in higher costs for film rentals and advertising, concession supplies, salaries, utilities and lease expense, driving total costs up to $762 million from $380 million. Wall Street knocked the shares down 13%. On this call and others, investors are growing more focused on the return of mid-range films. The understandable enthusiasm generated by a glow of mobbed superhero showings is morphing into a more realistic look at the longer-term prospects for the business. Blockbusters have higher film rental costs. And a bigger variety of films will bring in a bigger range of moviegoers, which is important for a full recovery.